Good morning, everyone. Welcome to today's webinar on JobKeeper Rules and Q&A session. Thank you for joining me. My name is Wes O'Donnell. I'm the National Workplace Relations Manager with SAB Group and HR Assured. Today we wanted to spend a bit of time recapping the JobKeeper rules around, obviously given that we're going to start that process from the first week in May, and just have an opportunity towards the end to ask some questions around the nature and the implementation of the scheme particularly. Some of you have been kind enough to send through some questions prior to today's session, and I'll try to address those as we go through. However, if any of you have any questions through the course of the meeting, please don't hesitate at all to ask any questions. More than happy to go through that process. I do apologise in advance that the taskbar is displaying, as some of you have already mentioned, at the bottom of the screen. I have tried to rectify that error prior to the session. However, I think that we can just live with it and progress on through. So that being said, I think the pace of change within the current framework that we're operating has been a little bit overwhelming for people. Obviously, we've had a very turbulent March period with a large number of restrictions imposed in very quick succession. We've then had a number of initiatives implemented by the government to effectively address the economic impact arising from coronavirus or COVID-19 and the restrictions imposed. By and large, a lot of those initiatives didn't have an overwhelming success in stemming the flow of job losses or feeling of despair amongst the economy. We have seen, however, that there is a really significant initiative through the JobKeeper scheme which has been implemented. But personal view is that it's a fantastic initiative of great value. However, the rules and legislation which has been introduced incredibly quickly. $130 billion scheme has been introduced in a number of weeks. The legislation that has been introduced to facilitate that scheme is exactly that. It's a facilitative act. There is very limited content and detail within the act. Rather, it indicates that the Treasurer and the government are able to implement rules associated with the management and implementation of that scheme. So what we find is that whilst we have an act, it's devoid of a lot of specific detail concerning the ongoing management of the scheme. And the rules are the body or the document which encompasses the day-to-day management and practice of the scheme. It has to be said that there are a number of omissions in those rules, and we note that the Treasurer, and through the Act, the Treasurer has the discretion to implement or implement variations or new rules as he deems appropriate throughout the 6-month period that the scheme is operating. So in that sense, we are getting updates from the ATO, we are getting updates from the Treasury. So we expect that throughout the course of the next 6 months, we will see that there is a shift in the rules to address any form of uncertainty or inadvertent gap in the application of the JobKeeper scheme. So we'd like to spend a bit of time around that as well today, and please ask questions as necessary, because I'm sure that if you have questions, they're also shared by others. The other thing I want to spend a little bit of time on today as well is just to also address the dispute proceedings and the dispute proceedings around with the Fair Work Commission. We have seen that there are an increasing number of disputes which have already been filed with the Fair Work Commission. We note that today's list before the Fair Work Commission has already approximately 8 disputes listed, which is an incredibly large number on a particular day in a very short period of time. In my own practice, we're seeing a large number of employees, or a relatively large number of employees, disputing the JobKeeper-enabled directions which have been implemented. So we need to be mindful, in my opinion, of the way in which we implement the JobKeeper-enabled directions so as to avoid the likelihood of a dispute before the Commission. I do think that it's an inevitability that the number of disputes before the Commission will naturally rise. So we need to be conscious of that as well, and we'll go through a few of those factors in a moment. So I don't want to spend a lot of time on the JobKeeper rules and associated information, because I think that we'll all, by and large, be across it. But I just wanted to go through just to ensure that we all have a base level understanding of the scheme itself. As I said, the actual act is what we call a facilitating act. It merely puts in place the JobKeeper rule scheme and amends the Fair Work Act to the extent that is necessary. The practical application of the scheme, however, has been implemented through the rules. As I said, the rules are somewhat different in that we don't need to pass, or the government doesn't need to pass the rules through both houses of Parliament. Therefore, we don't get debates. We don't get, a flavour of that legislation. We don't see amendments to the legislation to identify or correct any ambiguity or irregularity or gap. So that's generally the process when legislation is introduced and debated and argued within both houses of Parliament. With the rules, given that rules are implemented without the need for parliamentary debate and approval, we tend to find that there are some form of gaps and ambiguity which creeps through, particularly where we have such a large scheme which has been implemented in a short period of time. We do see, however, as I mentioned before, that the ATO are trying to address some of those issues of ambiguity, which we'll go through in a moment. But to clarify, the rules indicate that, as everyone's aware, that there is a turnover test which must be satisfied depending upon the actual turnover of the particular business. The relevant comparison is within a relevant period from 2019. Now, the government has been very clear, the Treasury's outlined as well as the ATO, that effectively there is discretion to allow an application which at first instance does not meet the required reduction in turnover to be approved. The Commissioner of Taxation has the broad authority under the Act and rules to allow an application where the business does not meet the eligibility criteria, but there is a legitimate or reasonable reason why approval or eligibility has not been met. These may be, as an example, that the period in 2009 is not comparable. It's out of sync, out of cycle, or not reflective. For sole practitioners, it may be also that is not a reflective period. We're seeing that a sole practitioner may have been absent in the corresponding period in 2019 due to extended leave, unpaid leave, sickness, parental leave, etc. We may also be able to make an application for exemption where the revenue in 2020 is also skewed or not truly reflective. It may be that there is a larger revenue recognised in March which isn't a true reflection of the revenue received. So we're really encouraging clients to speak with accountants, internal finance department, etc., and to really assess the basis upon which they may not be eligible, and if there is any basis upon which to suggest that there is a non-comparable period or out-of-sync information, well then we'd encourage you to bring an application for exemption for the consideration of the Commissioner. The ATO has also clarified that effectively there is a fortnightly period starting on the 30th of March, and the ATO has released a really great fact sheet which identifies those fortnightly periods in a table. What it has indicated is that an employer must be eligible at the end of each particular fortnight, that the individual is an eligible employee as at that time and has provided a nomination form, and that the employer satisfies the wage condition, which is that effectively there's no reduction in wage compared to what they're performing, and that all JobKeeper payments is passed on. Now, the important thing with this is that the fortnightly periods have been identified by the ATO, which means that the employer is required to effectively consider the income or wages received in that particular period, and then to effectively top people up. So this has been a really great initiative of the ATO. The ATO and many businesses were perplexed and challenged by out-of-sync payroll cycles. It was also challenged by businesses that were having a greater pay period. So now that they've issued that table, it actually is a really great initiative, and it makes it much, much easier. Few questions coming through concerning revenue and recognising revenue. Particularly in relation to the payment period, which I've just addressed, but we can address that in a moment if there's any further questions. So under the legislation and the rules, there is a twofold eligibility requirement. The first is the turnover requirement on the part of the employer, that an employer needs to satisfy that there is a reduction in turnover of at least 30 or 50%, depending upon the overarching turnover of a particular business in a given year. We then turn to employee eligibility. And there is a requirement that effectively an employee firstly be employed as at the 1st of March 2020 as a permanent employee. Alternatively, if the employee is employed but as a casual, then they must be defined as a long-term casual. Yeah? The definition of a long-term casual isn't contained within the Act or the rules, but the explanatory note associated with those documents goes further to say that a casual employee is likely to be employed on a regular and systematic basis where they have a recurring work schedule or a reasonable expectation of ongoing work. We've taken a lot of questions from employers around that definition, saying, how do I determine whether an employee is or is not a long-term casual for the purposes of the eligibility requirements? And am I going to expose the organisation to a particular risk in the event that I haven't determined that correctly and inadvertently nominate an employee who is not deemed a long-term casual? The peculiar nature of the rules, however, suggests to me that it's not necessarily an obligation or requirement on the part of the employer. There is, as I mentioned before, there is a two-stage eligibility test. The first is that the employer must satisfy the turnover test, and then the employee must satisfy the employee eligibility test. Currently, as we know it, there is no requirement through the employer application process to certify and attest that the employees are, or casual employees are deemed and defined as a long-term casual. But rather, we're seeing that the ATO is relying upon the employee nomination form. So the process will be that an employee must complete an employee nomination form. That employee nomination form includes that they were either a permanent employee on the 1st of March 2020, or alternatively were a casual employed on the 1st of March 2020 and deemed a long-term casual. Now, the employee will sign a declaration to that effect, which we believe will be sufficient to satisfying the ATO that they are in fact deemed a long-term casual. So with that, we've seen that there are a number of important exemptions that have come through. The important exemptions predominantly are those who are receiving parental leave pay are excluded from also receiving JobKeeper. Now, we appreciate that this will mean that many people on parental leave will need to make an assessment as to whether they continue to receive paid parental leave entitlements or whether it would be in their financial interest to effectively cease those payments and to include JobKeeper. Ultimately, it will depend upon where they are in the 16-week period of paid parental leave entitlements, because it may be best that they not receive any further entitlement under that scheme and continue to receive entitlements for a greater 6-month JobKeeper period. But ultimately, that's a matter for the determination and the election of your employees. The other exemption is where an employee is totally incapacitated for work and an amount is payable to them under a workers' compensation law in receipt of that total incapacity. Yeah. So this suggests that effectively where there is a total incapacity and receiving workers' compensation payments, they would also be excluded from the scheme. Yeah. It does not suggest that an employee who is absent from work due to illness or injury, which is not not receiving workers' compensation premiums or payments, are also excluded. So does not include those particular individuals. So in effect, an employee absent from work due to or injury and not in receipt of workers' compensation under the scheme may be eligible, subject to then completing an employee nomination form, to receive JobKeeper payments. It's really important that we note that effectively the employees are required to complete the employee nomination form. If anyone hasn't provided employees with that form as yet, you are strongly encouraged to do so. I am suggesting to my own clients that you actually, when you provide that form to your employees, that you download a copy on that day from the ATO and send that version, as opposed to a version which you may have saved on your own desktop or computer system. In the last week and a half, I know that form has changed approximately 3 times. So you're just wanting to make sure that the form that you're issuing your employees is the latest version of that form when you're doing so. We've seen a lot through the media in particular that suggests that, and I think that this is an unfair suggestion, that employers are being unscrupulous, that effectively they're retaining some benefit or putting some pressure upon an employee to work different arrangements or reduce rates of pay, etc. We've seen yesterday the ACTU has also launched a website which calls upon employees to dob in their boss who are implementing any unfair practices around that. But in effect, there is a very strict wage condition under the rules and the Act, which says that in order to be eligible for the payment, the employer must satisfy the wage condition for each employee. And to do so, the sum of the amounts must equal or exceed $1,500 per fortnight. So again, in very simple terms, what that means is that effectively in the defined fortnightly period, remember I referred to the fact sheet which the ATO has usefully distributed earlier this week, which puts in a table what those fortnightly periods actually are, and you need to assess that even if your payroll cycle is different to that fortnightly period. But in the fortnightly period, you need to assess any payments which would otherwise or have been made to an employee on account of their salary, wages, commission, bonuses, or allowances. An employee must then receive in that fortnight no less than $1,500. Where the salary, wages, commission, bonus, or allowances is less than the 15, then the employer pays that sum and superannuation on that amount, and then tops up the employee to the maximum of $1,500 per fortnight, and we call that additional sum a JobKeeper top-up sum or JobKeeper top-up payment, and superannuation is voluntary upon that additional JobKeeper top-up payment. So it's really important to recognise that this is an absolute requirement. And I think it's a fair introduction into the legislation to ensure that employers don't retain any benefit from the scheme. And we should be aware that effectively this is a civil remedy provision, meaning that in the event that any employer fails to meet the wage condition, it would impact on their eligibility to receive JobKeeper within that particular period, but also may result in significant fines and penalties. So I want to discuss a little bit about the process because we are seeing that there's a bit of confusion with this, but we'll go through it. In effect, there has to be an enrolment in the scheme, which was effectively open from the 20th of April. If the employer wishes to be paid the JobKeeper payments for the first 2 fortnights, then it must elect to participate in the scheme before the 26th, so 2 days to go. The fortnightly periods have been outlined, and we are informed that the ATO will be making reimbursements within the first week in May, backdated to the 30th of March. Now, 2 things from this. As we understand it, the ATO has not yet approved of any application. We were expecting, the ATO announced rather, that they were going to start making or announcing and communicating approvals in this week, which we haven't yet seen filter through. We do anticipate that they will be occurring next week, given that the payments are made the following. What we know, however, is that once the approval process has been made, there is an obligation to back pay eligible employees to the 30th of March 2020. Now, we appreciate that this does, in certain circumstances, create some cash flow difficulties for employers. And there was a push to amend the implementation and rules associated with the scheme to avoid that cash flow difficulty for many businesses which are already struggling in this time. The government hasn't, however, allowed a variation to the scheme, but it has effectively consulted with the major banks to allow for the flow of short-term credit facilities to meet the cash flow difficulties and cash flow timing problems. We saw yesterday, as an example, that the major banks have come out indicating that persons through and clients through the JobKeeper scheme will receive preference, and they'll make sure that there is an appropriate line of credit facility to ensure that they meet the JobKeeper payment requirement. But that's a significant point. There is a requirement to effectively back pay people to the 30th of March prior to receiving the initial payment by the ATO in the first week in May. Moving forward, payments will be made monthly in arrears, but again in arrears, so there is an obligation that payment be made in first instance. So I thought we'd go through a few common questions before we open it up to a Q&A, and these are just for our own clients that are calling through. So a couple of questions that we normally get is, do I get to choose which employee I can nominate for the payment? This is a really common question that we're getting a lot. And there seems to be a level of disagreement amongst many in the legal community around this. The rules and the Act are both silent upon this particular point, meaning that there was a view by many that effectively an employer could elect or nominate persons of their choosing, conditional upon the employer not applying that discretion in a discriminatory or unlawful fashion, meaning that I don't nominate men to the exclusion of women, as an example, which would be an example of direct sex discrimination. That position, however, is contrary to the explanatory memorandum which sits beside the rules, and that indicates that the scheme would apply on a one-in, all-in basis. So we also had during the week, earlier in the week, the Treasurer come out and express his own personal view that the scheme needs to be applied on a one-in, all-in basis, meaning that if the employer is eligible and wants to participate in the scheme, he must nominate all employees that themselves wish to be nominated and provide the nomination form. Despite the Treasurer's comments, again, there weren't any amendments to the rules or the Act, but 2 days ago we did see that the ATO came out and revised their own position, saying that they, through consultation with the Department of Treasury, now take the view that the scheme must be applied on a one-in, all-in basis, and that the scheme would be managed on that basis through the ATO. So even though there isn't any express content within the rules which suggests that it has to be a one-in, all-in, we now have the Treasurer's own personal view and the revised position by the ATO saying that this is the manner in which they will manage the scheme themselves. So I'm suggesting to clients that when you're applying this decision, I'd be strongly suggesting that you need to apply it on a one-in, all-in basis. Otherwise, there's a pretty significant risk that the ATO will take a dim view of it. So in that sense, we can only suggest to clients that whilst there isn't a formal requirement contained within the Act or the rules, we have pretty clear indications from the ATO that it should apply on that basis, and therefore we should err on the side of caution and approach it on a one-in, all-in basis. The next question we get quite commonly is employees were stood down on the 30th of March and have been accessing either annual leave or long service leave. Am I required to recredit them for that leave? First answer is no, you're not. It's an unfortunate position that employees who have been utilising their annual leave for the purposes of maintaining an income during the period of April are basically using that, and the company will be reimbursed. There isn't a requirement to recredit them. Depending upon your organisational profile, many businesses are electing to do so, though, just to maintain engagement with their employees and to take a positive a step from an employer, but there's no obligation upon you to do so. The next question we get quite a lot is, what if they want to top up the $1,500 by accessing paid leave? Is this okay? Again, this is a really vexed question with many practitioners. My personal view is that it's not okay. My personal view is that where an employer provides a JobKeeper-enabled direction to work 3 days as an example rather than 5, if an employee takes annual leave, then effectively they're taking annual leave in those 3-day periods. The only way in which I can see that it could occur is if the period of annual leave is added on top, but that will require a revision to the JobKeeper-enabled direction. So, as an example, an employee used to work 5 days per week, but the employer wishes for the employee to work a JobKeeper-enabled direction of only 3 days per week. An employee would like to effectively dip into their annual leave balance and take 1 day annual leave. What that effectively will mean is that the employer should provide a JobKeeper-enabled direction for 4 days, meaning that 3 days will be work in the workplace, 1 day taken as annual leave, and then that will achieve the same outcome. When the employee's annual leave balance is exhausted, the employer will then need to provide the employee with a revised JobKeeper-enabled direction upon 3 days' notice, revising the days of work from 4 back down to 3. So it seems illogical that we have to go through that process, but upon my reading of the rules and the requirements of the scheme, that is a requirement, and I can't see how an employee can effectively top up payments where a JobKeeper-enabled direction has been paid and they're wishing to utilise annual leave outside that period. The next question is, we've just been through the Easter period. Does the $1,500 include payment for the public holidays that were taken? And short answer is yes. We need to, even if an employee is stood down during that period without pay under 524 of the Act, there is a requirement to pay, and therefore we consider those 2 days as wages for the purposes of considering what amount was paid to the employee. Next common question is, we stood our employees down and now want to bring them back to work. We know we'll be eligible for the JobKeeper payment. However, they will be doing fewer hours than normal and might be required to perform different duties and or different work at different locations to their ordinary workplace. Can we force them to do it? Well, in short, yes, conditional upon the direction being reasonable. Under the amendments to the Fair Work Act, there is the ability for an employer to provide a direction to an employee. Now, the direction can be one of three things: a direction to work none or some of their contracted hours to work. So this is, you were meant to work 5 days per week, we don't need you to work any, or alternatively, we just need you to work 3 days per week, but half days each day, whatever that may be. The second thing is you provide a direction to work at any other location, conditional upon it being a reasonable travelling distance. And thirdly, you can direct an employee to perform any other duties in their skill set to perform. Yeah. Now, there is a requirement that you consult with employees and give them written notification, providing at least 3 days advance notice of the implementation of that direction. Now, what this effectively will mean is that where an employee disputes the reasonableness of that direction, an employee has the ability to raise a dispute with the Fair Work Commission which disputes the reasonableness, and ultimately the Fair Work Commission will be the adjudicator of fairness. Yeah? So just be conscious of that. Be conscious of your obligation to consult, be conscious of your obligation to put things in writing, be conscious, because of the consultation obligation, to reasonably consider the demands and requirements of your people. We are seeing that there is a relatively solid number of employees that are already raising disputes within the Fair Work Commission. We are seeing as well that a number of employees are seeking to dispute the reasonableness of the direction upon the basis of work health safety requirements. Now, I think it's a rather clever argument, and they're saying that I refuse, or I don't wish to comply with the direction because I don't want to return to the workplace exposes me to an unacceptable level of risk of infection, or alternatively, I live in a household with vulnerable individuals, that is people with immunosuppressant disease. It also involves persons of a particular age, persons of a particular health requirement, etc. And therefore I can't return to work because if I am infected, it will place them at a heightened risk. Now, there may be an element of truth to this. There may also be another cohort of employees that are trying to avoid the requirement to return to work so that they continue to receive JobKeeper payment without an obligation to work. But we need to ensure that before we enforce the direction that we reasonably consider the WHS issues. Have we considered the risk of infection? Are we compliant with the public health orders around social isolation? Are we compliant with the public health orders in relation to the requirement to work from home unless it's unreasonable or not practicable to do so? Are we implementing control measures in the workplace or in the residence to minimise the risk of infection? Are we monitoring and encouraging hand hygiene? Are we spacing employees out, etc.? And where we're able to satisfy those WHS issues, I think we're in a much better position to impose the direction. And then if a dispute is raised before the Fair Work Commission, well then effectively we'll be in a much better position to satisfy the Commission that all reasonable steps were taken to accommodate the needs of a particular employee and that the direction is reasonable in the circumstances. The next question is, I have a part-time employee who is eligible for JobKeeper but currently earns $400 per week as opposed to the $750. Can I get them to increase their hours? No, you can't, in short. The JobKeeper-enabled direction is that an employee works none or some of their contracted hours of work. In these circumstances, it's just an unfortunate or beneficial, depending on whose perspective you're looking at it, a beneficial outcome that an employee will receive more than they would otherwise be eligible for. You can, however, request an employee vary their days and hours of work by consent. We've talked about the ability to issue a JobKeeper-enabled direction, but there is also the ability to request an employee vary their days and hours of work. Where you make that request, an employee must consider it and must not unreasonably refuse it. Now, if an employee unreasonably refuses your request to increase their days and hours of work, the employer can bring an application before the Fair Work Commission arguing that the refusal was unreasonable. And again, the Fair Work Commission will be the adjudicator of reasonableness in the circumstances. When I'm talking this through with clients, one of the things I say is, well, what's the basis of their refusal and what's the basis upon which you want them to work more? Is it the case that the employee is saying that they can't work more because they have childcare responsibilities, study arrangements, they have a secondary role, etc.? So in those circumstances, I think that employers will be hard pushed to require an employee to work more. It may be considered reasonable where an employee does not have any of those personal factors or circumstances and an employer is prevented from employing others, but I think that it would be a pretty difficult argument to push it through. The last question before we go to Q&A is the turnover test a one-off, or once you're in, is it a one-off requirement, or do you need to satisfy it every month? This is the $3 million question, which is still not yet satisfied by the ATO, which we expect will be confirmed next week. The current suggestion is that it's a one-off test that is determined upon the commencement of the scheme and that an employer does not need to meet the test every month. There is a level of uncertainty around that upon the reading of the rules, and the ATO has been asked to clarify that position. However, as yet we haven't seen any detail from that, and we expect that the ATO will be making an announcement next week, and we believe that that will come in the form of clarification around the application process, the documents that need to be provided, but also the monthly declaration that an employer needs to provide. So I think it's a really important question. At the moment, we're just saying that effectively it appears it's a one-off requirement. However, it may be the case that the ATO takes a different view and we should receive some form of confirmation of that next week. So just looking at the questions, I thought we'd go through some of the questions. I'm just trying to get them open. Thank you for all of them. Received a lot of questions today. Thank you very much for that. I'll try to go through as many as we can as we go through. Follow-up question in relation to part-time employees, saying part-time employees and asking them to work more hours. What if the employee agrees to work more hours? Well, as I mentioned, that's absolutely fine. You'll just need to reflect that there is an agreement to work those revised hours of work. With that agreement, and what will happen is that you reflect it within a contract of employment. One thing that I am suggesting to clients, though, is with the JobKeeper scheme is, one, don't enter into binding financial arrangements with your employees until you receive confirmation of acceptance and approval from the ATO. Even where it's very clear that you're within the 30% reduction or 50% reduction in turnover, just be cautious. You don't want to be rejected or denied for whatever reason, and then you've entered into these binding arrangements with employees. The other thing to consider with that question as well is just consider how long this arrangement is in place. So if you agree with an employee to vary their regular pattern of work, which increases it from, let's say, 2 days to 3 days per week, are you wanting to put a cap on that? And I'd be suggesting that you do. So you might want to say that that arrangement is for a temporary time, which will stop at the end of JobKeeper. Otherwise, if you reach an agreement to vary an employee's terms and conditions of employment and you reflect it in writing, unless you qualify it and limit it for a period of time, it will generally be taken that it is an ongoing change to their contracted hours of work. So you don't want to be locked in to an increased commitment after the conclusion of the JobKeeper scheme. So don't enter into any financial binding arrangements now. If you do, say that it is conditional upon approval of the JobKeeper application. Secondly, if you are agreeing to increase someone's days, hours of work, I'd be strongly recommending that you qualify that approval, stating that it will be for a limited period of time during the JobKeeper arrangements, and that the employee will automatically revert back to their standard contract of employment once that scheme concludes. Good question on the one-in, all-in scheme or arrangements. The question is, if one-in, all-in, do employees still have the choice not to participate? Yes, they do. They absolutely do. It's conditional upon, payment is conditional upon, as I've mentioned before, employer eligibility and employee eligibility. And employee eligibility also requires an employee to complete and return the nomination form. For whatever reason, an employee may choose not to. Yeah, that's absolutely fine. That means if they choose not to return the form, then effectively they're outside the scope of the JobKeeper arrangements. It does mean, however, that they can't be issued a JobKeeper-enabled direction, but it means that you as a business will either need to make a decision on whether to make more difficult decisions around that particular employee, whether you make them redundant or whether you continue a period of unpaid stand down under the Act. So in short, yes, they don't have to nominate, but we're suggesting that in those circumstances we have a conversation with the employee to determine why they're refusing to participate and why they're not returning the employee nomination form, and suggest to the employee that in those circumstances it may result in the company having to make more difficult permanent decisions which may impact upon team members' ongoing employment, and therefore you address their concerns and see whether you can effectively change their mind. But really good question. So the question that we have is, if an employee earns $900 in the fortnight, we will pay them the top-up of $600 per fortnight. Does the employer retain the remaining $900? In short, yes. I keep referring back to this ATO fact sheet, which was released earlier in the week. I'd suggest if anyone hasn't seen it, they download a copy of it, because it really clearly sets out the fortnightly period for the duration of the scheme. What you effectively are required to do is, in that fortnight, consider what wages, allowances, commissions, etc. were payable to an employee for that period. You've already paid that or should pay it, so effectively the JobKeeper scheme acts as a subsidy. So that amount, up to $1,500, is retained by the employer as a subsidy. If the amount is less than the $1,500, remember there's that wage condition that we talked about, so an employer can't retain a benefit of the scheme, which means that the balance or the difference between the wages that were otherwise payable in that fortnightly period and the $1,500 needs to be passed on in full to your employee. So in short, easiest way I explain it is, consider what was paid or should have been paid in that fortnightly period. There is a subsidy, meaning that the company retains the value of that if it's up to or less than $1,500, and any difference or balance is passed on to the employee. The difference or balance is classed as a JobKeeper top-up payment, and superannuation is voluntary upon that sum. Another good question, do I pay annual leave accrual on the top-up amount? Very good question. Yes and no. Let's not consider the top-up amount, because I think that's an incorrect way of considering the requirement to accrue annual leave. What the Act says is that where you provide a JobKeeper-enabled direction, annual leave will accumulate in the normal course on their their normal contracted hours. So a lot of terminology there, but I'll step it through. What that means is, if you give a direction to an employee to work none or some of their hours of work, then annual leave will accumulate as if that direction hasn't been given at all. So an employee, full-time employee working 5 days per week, you give them a JobKeeper-enabled direction that they either work none or, as an example, less or some, say 3 days per week, then their annual leave will continue to accrue as if they were a full-time 5 day per week employee. Okay, pretty clear. If, however, you reach an arrangement with an employee to vary their terms and regular pattern of work, so this is by agreement with an employee to vary their regular and contracted pattern of work, then annual leave will accumulate on the agreed pattern of work. So let's play that out. An employee normally works 2 days a week. We request and they agree to work 3 days per week. Annual leave will accrue on 3 days per week in that period. Yeah? An alternative arrangement is that an employee works differing hours and days, and that is by consent. Well, then again, annual leave will accrue on their varied, agreed pattern of work. So it's a really important distinction and a great question, actually. Annual leave, if there is a JobKeeper-enabled direction for an employee to work none or some of their contracted hours of work, annual leave will accrue in the normal course as if the direction hasn't been given. If there is an agreement to vary their contracted or regular pattern of work, then annual leave will accrue on the agreed rate. Good question around employees with multiple employers. So the question is, what happens where an employee has multiple employers, as many people do? Also, what happens if one of their roles is as a sole trader? Effectively, the obligation under the scheme is that a person can only receive JobKeeper payments for their primary or sole role. Now, this is again contained within the employee nomination form that must be completed and returned to the employer. Ultimately, or in many circumstances, it's pretty clear what the primary or who the primary employer is in those circumstances. There isn't any hard and fast guidance which has been provided by the ATO either in their practice notes or either the rules themselves. However, there are a number of examples, live examples, which the ATO have given, and they seem to be relying upon where the employee claims the tax-free threshold. So with every role that an employee has, they need to complete a tax file declaration form. On that tax file declaration form, they have the ability to elect to claim the tax-free threshold in one of those employers. So the case studies or examples that the ATO have given suggest that wherever that tax-free threshold is applied, by and large, we'll assume that is the primary employer. So yes, many people have multiple employers, but they can only claim for one. The next question is a really good question, is in relation to, are children attending high school full-time eligible for JobKeeper payment? Yes, I've never actually seen this question, so it's a great question to consider. I've never seen this before, but I don't see why not. The rules and eligibility for employees simply refer to an employee's age. It doesn't say that they're excluded by virtue of the fact that they remain a full-time high school student. So just looking at the rules now, rule number 9, as of 1st of March 2020, the requirements are that the employee was an individual aged 16 years or over, was a permanent employee, long-term casual, and then there are a variety of visa or resident conditions. So there's nothing within the rules which suggests that full-time students are excluded from the operation. So great question. Question here saying COVID-19 started around December, January. So as a result, some of our long-term casuals have not been working for 3 months. Can we consider them a long-term casual if without the COVID-19 they would continue to be working? I would, again, personally suggest that this is a matter to be determined by an employer, but I would say no. There needs to be a degree of regularity against a pattern of work. And where an employee hasn't been working for 3 months, as at the date of commencement of the scheme, I would suggest it's going to be very difficult for that employee to be deemed a long-term casual under the rules. Next question about how you apply for an exemption, about eligibility if revenue has only fallen by 25%. The exact mechanism or process by which you do that has not yet been identified. There should be a mechanism which is released next week through the ATO. I'd be strongly encouraging you to speak to your bookkeeper or accountant around that. I'd be strongly encouraging you to gather some information around why the 2 periods of time are not comparable. That is, if there's been a out-of-cycle income payment or employee count, etc., just gather it, and there certainly will be an application process, and I think that should be pretty quickly, actually. So speak to your bookkeeper and accountant. If there's no information through early next week and you do need to apply for an exemption, I'd strongly encourage you to consider calling the ATO and state that you are falling outside the clear parameters but wish to apply for an exemption, and ask them to advise what that exemption process looks like, given that effectively the payment scheme will continue or commence from May, so there's not a lot of time. There is a question here, in the event of employees normally earning less than $1,500 per fortnight, but is being paid $1,500 per fortnight in April, later the employee or the employer were deemed ineligible, would the employer be deemed or required to pay it back? In short, yes. There is savings provisions under the legislation which says that where an employer manipulates their practice for the purposes of eligibility, and they otherwise wouldn't be eligible, then effectively the ATO the government can seek reimbursement of the payments made. There's also likely the ability to recoup payments made to employees where there is no eligibility, but the eligibility criteria was manipulated for the purposes of satisfying the test. I would say with that, though, that the ATO and the Treasurer have indicated consistently that the scheme will be managed in a business-friendly way. That's their terminology that they're using. And I don't necessarily get the sense that the ATO will be looking for a very strict, hard and fast application and recouping monies in those circumstances. I think that the scheme will be managed relatively liberally. We shouldn't, of course, be manipulating eligibility criteria for the purposes of satisfying the test unlawfully, but yes, there's the ability to claw back. If eligibility is reviewed in future and it was a matter of genuine oversight or mistake, I don't necessarily think that large things are going to come from it. So just reviewing some of the questions. I'm sorry that I can't get to everyone's questions. There are over 100 questions being asked. I'm just trying to filter through some of them to see whether I can answer some type of question which hasn't been addressed in some fashion. So I'll probably just get one more question before we finish on time. Yeah, probably finish with this one, which is a really good question. What would happen if you're approved for JobKeeper and an employee refuses to come into work? Great question. I've got 2 dispute matters after this with clients in exactly the same circumstance, and I am seeing it a little bit. Technically, there's nothing wrong with continuing to manage your employees during the operation of the JobKeeper scheme. Yeah, so that is, there's nothing wrong with undertaking performance management process. There's nothing wrong with undertaking a disciplinary process. There's nothing wrong with having ongoing reasonable management engagement and interaction with your employees. What we have, however, is a very clear framework which says, and the Prime Minister has said this himself in various press releases and media conferences this week, that there is an expectation that an employee receive payment that they provide services of value to the employer. Yeah? They keep saying that the purpose of the scheme is to keep employees close and connected with a business so that a business can ramp up in quick fashion after the restrictions are lifted. So there is certainly an expectation on the part of an employee to work. Now, we provide a JobKeeper-enabled direction. Where an employee disputes the reasonableness of that request, they may push that into the Fair Work Commission. But they do not have a blanket right to refuse. They can only refuse where the direction of the employer is unreasonable. Now, what is unreasonable? Ultimately, the Fair Work Commission is the adjudicator of reasonableness. The big one that I'm seeing employees raise as a valid basis for dispute is this WHS requirement. Don't want to come into the workplace because I'll need to use public transport, increases risk of infection. Vulnerable member of my household who's in a high risk category, don't want to come into the workplace, higher risk of infection. Yeah? We need to consider what steps you've taken to ensure people's welfare and well-being in the workplace. You know? Can they work from home? First question. Effectively, under the public health orders, they need to work from home unless it's not reasonably practicable to do so anyway. So that's the first assessment. Secondly, if they are required to come into the workplace for whatever reason, are you still complying with the public health orders? That is, are employees recognising social distancing in the workplace? Are you spacing employees out if you're in a professional capacity? If you have interaction with members of the public, are you able to maintain social distancing, create barriers between the members of the public and your staff, etc.? Are you putting other control measures in place around hand washing facility, personal hygiene, hand hygiene, those type of arrangements? And where we've done all of those things and we're complying with the public health order and the advice of the Chief Medical Officer, I kind of think that an employee will have a reduced basis in which to refuse the direction, in which case an employer can even push the employee into the Fair Work Commission process and raise a dispute, and the Fair Work Commission will effectively order the employee to work the direction if it's considered reasonable. Now, if the employee still refuses, then ultimately the only options available is that A, they'll need to resign, or B, the employer can undertake disciplinary proceedings which will eventually lead to dismissal. So, great question. I do think we need to go through that consultation process with a little bit more vigour to ensure that we address the particular concerns of employees, particularly in the context of WHS requirements. But ultimately, there's an inbuilt vehicle through the Fair Work Commission if an employee continues to dispute the legitimacy of a direction to return to work and provide services of value. So thank you very much for attending. I know I've gone a little bit over time today. Apologise for that. Thank you for the questions. I sincerely apologise that I haven't been able to get to the many questions which have come through. I hopefully have addressed them through the presentation anyway. I was trying to monitor the questions as they come through. On the screen, we do have FCB's contact details in Sydney, Melbourne or Brisbane office. If any of you are clients that would like further assistance, please do not hesitate to contact the respective office and ask for one of my colleagues that you're typically dealing with. If any of you are not clients and would like some assistance or would like to speak with me further, please don't hesitate to contact the Sydney office on 02 9922 5188. That's 02 9922 5188. Thank you very much for your attendance. Please stay safe. Good luck with the implementation of the JobKeeper arrangements in the next 2 weeks, which I'm sure will be the critical period for most businesses. If we can assist, by all means, please let us know. Please pay attention to future email alerts. We undertake these webinars on a regular basis to provide clients and partners with updates in the current framework. So we'd more than be happy for you to attend a future session. So thank you very much. Have a nice weekend and stay safe.